Hi guys, Michael here. In this video I'm going to show you how to invest in the Australian share market with no trading skills or investor experience required. That's right, just a plain and simple path to wealth for beginner and intermediate investors. Let's get into the video. If this video brings you value, please like for the whole YouTube algorithm and comment your thoughts below. I really enjoy talking with you guys and I reply to everyone. And subscribe for more awesome content on personal finance, savings, investing, and overall a bigger, better, wealthier life. I thought I would make this video because I've been alarmed by the amount of new investors entering the market, making crazy, risky investments, investing in bankrupt companies, investing in airlines, cruise ships, thinking that there's going to be a V-shaped recovery. But we don't know if that's a guarantee. Virgin had to be sold off. Qantas is sacking thousands of workers to try to stay afloat. So we just don't know what's going to happen. And I've heard of crazy options trading. So in this video, I'm going to show you the simple and best way to invest. Now, just a disclaimer, this is not financial or investing advice. If you want advice, go speak to a financial advisor. This is for entertainment purposes only. So what is a share? A share is pretty much you buying part ownership of a company. The more shares you own, the more ownership of the company you have, but you can't make management decisions. Once a company makes profit, they decide what to do with the profit, invest it back into the company or to pay out a dividend. And most Australian Big Four banks pay dividends, but then there's growth stocks like Amazon, which invests most of its money back into the company to grow the company, which will increase its value. How do you make money investing in shares? Put simply, you make money by the company growing and making more revenue. The more revenue and profit the company makes, the more valuable it is. Secondly, you make money by dividends. So for example, if a company pays 5% dividend and you own $10,000 worth of shares, every year you'll get around $500. And most Australian companies pay their dividends every 6 months, and most American companies pay them every quarter. Now, some great apps to use to invest, what I think anyways and what I use is CommSec, and that gives you access to 7 different funds. The biggest Australian fund is the ASX 200, which just is a fund that has the top 200 companies. So if you put in $50 in that fund, it'll spread your money across 200 different companies and reduce your risk. It also have funds like the IAO, top 100 global companies, so it diversifies your investment across different countries, and funds like the NASDAQ 100, and also a dividend ETF, which pays around a 5% dividend, and a few more. I've also heard that Self Wealth is a good brokerage to use. They have cheap brokerage fees of $9.95, but I haven't personally used that, so I can't really comment too much on it, but that's another good one to check out. Another investing app I like to use, which isn't the best for performance and fees wise, but it's just another way for me to invest, is Raise. And what Raise does is it rounds up every transaction. So say for example, if you buy something for $1.50, it'll take 50 cents out, and once you round up to around 10 all the way up to $40, it'll then take that out and invest it across different ETFs in bonds, US and Australian ETFs. And I just feel like that's another way to invest small amounts, and it adds up over time. And it's something you don't even think about, but then you look in your account, 6 months later, and you have hundreds, even thousands of dollars in there. Now, what I think is the best app for investing in US stocks individually is Stake. Stake is a really easy and quick to set up app where there's no big paperwork involved. You just put in your personal information. They fill out all the tax forms for you on your behalf with the personal details you put in. And you can invest in US stocks with no brokerage fees. All you have to pay is a 0.7% fee for transferring funds from Australian funds to US funds. And depending on the exchange rate, that can add up to around 1%. But it's probably the easiest and best way to invest in US companies. Now, before you invest, there is a couple of things you should do first. If you have any high interest debt over 4 or 5% interest, you should pay that off first, because there's no point investing when you have a personal loan of 10 to 15% or credit cards 20%. That's a guaranteed 10 to 20% return on your money far better than the average returns that you can get in the stock market. So it'll be best for you to pay off all your debt first, then that will free up more cash flow for you to invest in later. Also, with that, you should have an emergency fund. And I recommend at least 3 months worth of living expenses, because the last thing you want to do is there to be a big market crash and you have to sell your shares to pay living expenses. So make sure you pay off debt and have an emergency fund, and then you'll be ready to invest. Okay, so now you need to figure out what your investment style is going to be. There are value investors, which look through the market for cheap companies. There are growth investors, which a company might be expensive now, but they're looking for if it was going to have a lot of potential to grow. And then there are passive investors, which, like myself, just put money in an exchange traded fund that's an overall market fund which just tracks and invests for the long term. And I think for beginners, this is the best way to go. And again, this is not financial advice, this is just for entertainment purposes only, and just what I would do. And even Warren Buffett recommends investing in index fund for beginners. And he said he's going to put 90% of his estate into index funds. And if you look at the ASX All Ords since 1900, it's averaged a return of 13%. That's a great return. And this will help you sleep a lot better at night. And then you don't have to constantly monitor companies' reports, and you don't have to constantly monitor the market. You can just have that peace of mind knowing, okay, every month to 3 months, I'm just going to put my money in, and over the long term, it should grow. So some good ETFs or index funds that I recommend, if you want to support Australian companies, would be the ASX 200 ETF, which is IOZ. And if you want to get into the US markets, you can actually do that through the ASX by buying an ETF that's called SPY. That is the S&P 500 index fund, and that tracks the top 500 US companies. Then, like I said before, there's the IAO, which tracks the top 100 US global companies, which will help diversify your investments across different countries. Now, let me show you the power of compound interest. If you invest $150 per week with an average return of 9%, after 10 years, your investments would be $130,000. Now, if you push that out a bit longer to 20 years, that will be $427,000. Again, if you push that out for 30 years, it'll be 1.1 million. Now, this is where the power of compound interest gets very powerful, because every 10 years, your wealth accelerates. Now, if you put it off for 40 years, you have $2.7 million. If you invest for a lifetime, your adult life, and you want to build a legacy for your family, you want to leave behind something and raise your family name and create generational wealth. If you leave those investments, just again with $150 a week, and I'm sure many of us could figure out ways to increase that, after 50 years, and this is the power of compound interest, that would be worth $6.7 million. So if you start investing around 20 years old, when you're 70, you'll have a net worth of approximately $6.7 million. And again, this is just an example. There are ways where you can make better returns, and that is why I recommend just dollar cost averaging and investing for the long term, because it is time in the market, not timing the market, that gives you those big compound interest gains. Now, I know there is so much uncertainty today with the global recession that we're in, and we don't know if that's going to turn into a depression. But what you can bet on is if you cut your expenses, increase your savings, start a side hustle, and invest for the long term, you'll be much better off than in your current situation. Many people don't invest because they're afraid to lose money, or they think it's a bad time, but they're happy to spend every dollar they have and put the rest on credit. I'm telling you, if you invest for the long term, you'll be much better off. I'm sure many of us, myself included, wish we could have invested in 2008 where share prices were very cheap. So now is a good time to start your accumulation phase when there's a lot of uncertainty, because there'll be a lot of volatility. And when the market drops on those red days, it'll be good buying opportunities. So guys, I hope this gave you some insight and perspective on how to invest. And I really hope you make some sound investments not taking those big option risky investments, not investing in bankrupt companies, not getting involved in the hype of all these tech companies like Afterpay and ZipPay, and just start getting your finances in order. The most important, pay off debt, have an emergency fund, and then invest what you can afford to lose in over the long term. And if you do this, like I said, 20 years, 30 years, you will be a millionaire and you'll thank yourself for doing it. All right, guys, if this video brought you value, please like for the whole YouTube algorithm and comment your thoughts below. What do you think is going to happen in the market? What is your strategies? And subscribe for more awesome content on personal finance, savings, investing, and overall a bigger, happier, wealthier life. See you in the next one.